Ladies and gentlemen, welcome back to a mid-market update video. S&P 500 currently up 2.60%, looking to retest the highs of the day and make another breakout. You have the Nasdaq up over 3%. We're going to talk about exactly what's happening with the macro, with the news that is actually causing today's move in the markets. But this video is going to be more so focused on AMC, and specifically this article that came out 2 hours ago. It says 5 investors betting big on AMC stock and why you should too. If you're not intrigued by that, well, maybe you are not an ape, or maybe you just don't want to make money, because we have a golden opportunity here. This is like what happened before GameStop rallied or before AMC rallied. There's no hype. You're not buying into the premium. You're buying potentially AMC or some of these other stocks at the lows, and really heading throughout the rest of this week, I think you're going to see that big move to the upside or a big move to the downside. But if you can't tell, I'm more skewed to that upside move, guys. So that's the intro that you're going to get for this video. Hit that like button for the good old Budweiser hat. There's always some wild things that happens whenever this hat comes out. So thank you guys for doing that. Subscribe to the channel if you guys have not already, and come trade with us live in real time. Link down below in the description if you guys want access to that. But nonetheless, 5 investors betting big on AMC stock and why you should too. That's pretty straightforward. It says check the institutional holdings before you assume that AMC stock has a bad reputation. Like I said, this article was made 2 hours ago by David Modell, Investor Place contributor. It says institutional investors have surprisingly large positions in AMC Entertainment stock. Discontent over the issuance of AMC preferred equity units has brought AMC shares to a low price, or discontent. Investors should consider holding a few AMC stock shares for a turnaround play. And it says right here, I really want to skip to just the 5 investors because they do hold a lot of AMC. It says, you might be surprised to learn that 28.4% of AMC Entertainment shares are held by institutions. Furthermore, the list of institutional investors as of June 29, 2022 includes some names that ought to be quite familiar. Vanguard owns 95.18 million AMC shares, which comprises 18.42% of the outstanding shares. For comparison here, Vanguard owns as many shares that are currently sold short in AMC stock. Just Vanguard alone. So that's telling you something. BlackRock owns 51.77 million shares, or 10.02% of the outstanding shares. State Street owns 20.53 million AMC shares, which equates to nearly 4% of the outstanding shares. Goldman Sachs owns 5.98 million shares, or 1.16% of AMC's outstanding shares. And Bank of America owns 5.42 million AMC shares, which translates to 1.05% of the company's outstanding shares. Now, why are these hedge funds betting alongside the apes? Why are they betting with us? Why are they buying AMC stock in the millions of shares? Well, AMC stock is low enough to buy now. That's the quite honest truth. Literally put right here. It's low enough to buy now. That's an impressive list of big bankers betting on AMC Entertainment. Aren't they disappointed that the company chose to issue so many ape shares, though? In case you didn't get the memo, AMC stock dove after the company filed to issue as many as 425 million ape shares, the preferred equity units. This reinforced the skeptics' notion that Aaron is willing to do anything to raise capital, even if it raises share dilution concerns. This widespread sense of pessimism and anxiety caused the AMC Entertainment share price to plumb to new depths recently. A widely read article from the Wall Street Journal only added fuel to the proverbial dumpster fire. Consequently, AMC stock traded at a bargain basement price of $6 in mid-October. Bear in mind the stock's 52-week range is $5.47 to $45.95. So there seems to be a whole lot more room above than below. Of course, a stock that has fallen always can fall further unless it's at zero. Still, if AMC Entertainment posts positive earnings surprises in the upcoming quarters, there's the potential for a swift and powerful share price appreciation. It's apparently a bet that some big banks are willing to take, so just maybe you could consider holding a stake. And I think that's the biggest thing to really point out. Like they just said, it's already fallen so much. And from our perspective, from the retail ape short squeeze community, whatever you want to call it, whatever name you want to put or however you want to title it, the lack of attention, the lack of bullishness that people have is where the real opportunity comes in. After all, you want to be someone that is up on the latest trade before the general public is, right? Just like if you guys have followed this channel for a while, I bought Mullen Automotive at 65 cents, 70 cents. That thing went over $5 a share, right? You want to be early to these so you can actually profit to them, especially as we might start to veer a corner and you might start to get some more bullish action in stocks based off of some macro events that are happening. But the big story is going to be earnings. Just because stocks have fallen so much, right? Snapchat alone, one of my larger holdings, down 80% in the last year. Square down 80% in the last year. Well under pre-COVID levels. Like, these stocks are not even at pre-COVID levels. They're at COVID crash levels, like the lows of the COVID crash, which is absolutely ridiculous considering how far some of these companies have come. Even if you look at AMC, they're probably going to have a better revenue this year, but especially in 2023 than they had pre-COVID, but yet you're going to value the company at such a low price, right? There's a problem going on here that is going to set up, in my opinion, for a big move to the upside. Believe it, don't believe it, doesn't matter to me. I'm giving you guys the data that you need to come to your own conclusions. Try to make this make sense a little bit, right? And what we have going on right now, like I said, might be a somewhat of a turning point for the stock market. We'll see, obviously, but as you guys do know, midterm elections are historically bullish for the stock market, and we do have a midterm election coming in about 1 month from now. And by then, I'm sure you will start to see a recovery. Let's not be political here, but I think it's in the government's interest to have the stock market go up before midterms, possibly giving us a Fed pivot around November 2nd, possibly the Fed not cutting rates. That's not going to happen, so don't even think that's going to happen. Don't bet on that's going to happen. It's not going to happen with 8% inflation. But what could happen is the Fed slowing down the pace of rate hikes, and that could be ultra bullish for the markets. Now, the biggest thing that really happened today is bank earnings. It says, where is it? Bank of America CEO says latest spending and savings data show that the U.S. consumer is healthy. And that's a big thing is, you know, when the Fed's raising rates this aggressively and inflation's really not coming down, the last thing you want to see is the consumer that's not healthy. Yeah, you want to see unemployment going up. You want to see these things that are hopefully going to lead to inflation going down actually happening, but you don't want to see the consumer just completely falling apart very, very quickly. And it looks like it's not happening as of right now. So that's good, and that's potentially a precursor for the other earnings to come. If the banks did really well and they're saying the consumer's okay, well, maybe Apple earnings are going to be good. Maybe some of the advertiser earnings are going to be good, right? Google, even Amazon with AWS, right? Snapchat, some of these companies that can move the broad markets, maybe their earnings are going to be good. And considering these stocks are down, 50 to 80% over the last year, there's a lot more potential upside if you get earnings surprises and earnings beats than you are to see, more big drops. So that's really the big story of today. You also do have some interesting things happening in the UK. This article says UK Prime Minister Liz Truss faces serious pressure to resign after failed budget. She just took office like a month ago, right? But she did hire basically a new finance minister, and he announced a package, so-called a mini budget, on September 23rd. The measures triggered market turmoil from a plunging pound to pension panic and a rare public rebuke by the International Monetary Fund. So essentially what the UK has now done is they are actually going to raise rates. They're going to follow through with the same thing Boris Johnson put into effect. And that means that markets are saying, hey, the UK is not going to have to raise rates as aggressively because they're not stimulating the economy, right? They're not going to give this massive stimulus to people with money, and they're hopefully not going to see as much inflation. And essentially, why that's a good thing is because the markets are forward looking. So if they say, hey, you're going to have to raise rates a lot more if you do this down the line 6 to 12 months from now to get inflation under control, the markets are going to discount that in the bond yield, right? So that's why they're going to go sell off bonds and make the bond yields go up in a big way. And that's why you had the pension panic situation, as this article put it. And a lot of pension funds were starting to actually go bankrupt and get margin called, right? So you're seeing the pound actually strengthening today, getting back some of its value that was lost. And you're also seeing bond yields fall as investors are starting to buy some of those bonds back and drop the yield. So all in all, today was very positive with the UK and the macro events, and it was also very positive that bank earnings were good, because bank earnings, if they were real bad, well, the markets would have reacted very, very negatively to that. Now, last thing we're going to talk about is AMC stock, the actual short interest data, and we're going to go through all of this more in depth, as you guys know, at the 4 o'clock video. But for now, we have an estimated short interest of free float at 19.02%, free float out on loan at 35.57%, shares out on loan 183.3 million, days to cover at 4.57 days, cost to borrow at 19.31% as well. And we're going to talk about the technicals as well at 4 o'clock, but it looks like we're starting to turn a corner that could potentially be very, very good for the stock market. And there's actually another article that I do have pulled up right now that says, get this, let me pull up the title. It says, there's good news hidden in the current market turmoil. And that's another one you want to see the main points to this article, because you might agree with me a little bit more that we're potentially on the cusp of seeing a big rally and potentially a big recovery in the market. So we have a lot more in store at 4 o'clock. Make sure you guys tune back in so you guys can get the full scoop on this whole entire situation. Go over the earnings, what's expected, what's not expected, how you could potentially make some profits off of them as well, some of the bigger trades that I am looking at making. So that's going to be it for this video, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you guys have not already. Thank you for watching. If you guys want to come trade with me live in real time, link down below in the description of this video, as well as that. If you guys want free stock, Webull, Moomoo, and Public, links down below in the description of this video. Thank you for watching, and I will see you in the next one.